Welcome to the Ontario Mortgage and Real Estate Insights podcast, your go-to source for the latest developments, trends, and regulatory changes in the industry. I'm your host, Steve Hamowen, here to provide you with insights sourced from reputable news outlets to help you stay informed and make well-informed decisions.
This podcast is brought to you by Real Approved Inc., a trusted mortgage brokerage dedicated to helping Canadians achieve their homeownership dreams. Visit realapproved.ca to learn more about how our experienced team can assist you with your mortgage needs. Let's dive into today's episode. The Bank of Canada has announced yet another interest rate cut, Steve. This is their 7th consecutive reduction since June of last year, bringing the rate down to 2.75%. It's quite a development for the housing market, especially as we approach the spring season.
Absolutely, Janine. Lower interest rates generally mean lower borrowing costs, which could be a great opportunity for first-time homebuyers to finally get into the market. With the new mortgage rules that took effect in December, we might see more activity from those who were previously sidelined.
That's right. The new rules include extending the amortization period on insured mortgages from 25 to 30 years, which lowers the monthly payments. Plus, there's a reduction in down payment requirements for homes up to $1.5 million, making it easier for buyers in high-price markets to make that leap.
It's really about making homeownership more accessible, Janine. And with the Bank of Canada's rate now at 2.75%, down from 5% just a year ago, the conditions are certainly more favorable. Fixed and variable mortgage rates have also decreased, which further reduces the cost of borrowing.
And let's not forget about the First Home Savings Account, Steve. It's a registered plan designed to help first-time homebuyers save for their first home. Contributions are tax-deductible, and withdrawals for purchasing a home are tax-free. It can really maximize a buyer's purchasing power.
Yes, the FHSA is a great tool for first-time buyers. They can contribute up to $8,000 annually, with a lifetime contribution limit of $40,000. It's a strategic way to save, especially when combined with the lower interest rates and new mortgage rules.
For those who qualify, it's a fantastic opportunity. To open an FHSA, you need to be a Canadian resident, at least 18 years old, and a first-time homebuyer. Many banks and investment firms offer these accounts, making it accessible for those ready to start saving.
This combination of lower rates, new rules, and savings options like the FHSA could really invigorate the market, encouraging those who may have felt excluded before. It's an exciting time for first-time buyers, Janine.
Indeed, Steve. Buying a first home is a big step and can be overwhelming, but with these changes, it feels more within reach for many Canadians. It's important for potential buyers to stay informed and consider all their options. Steve, with the recent announcement from the Bank of Canada, there's a lot of buzz around the new lending rate cut. They've just reduced the rate by 25 basis points, bringing it down to 2.75%. This is the second cut this year, and it's really catching people's attention.
That's right, Janine. This decision by the Bank of Canada reflects the ongoing economic uncertainties, especially with the U.S. imposing tariffs on Canadian exports. According to TD economist Derek Burleton, these tariffs have created a lot of uncertainty and have shaken confidence in Canada's economy.
Exactly, Steve. Burleton mentioned that this uncertainty is impacting consumer spending and investment. The Bank of Canada is trying to cushion the economy by making borrowing cheaper, which could help stabilize things a bit for Canadians.
The central bank's lending rate is crucial because it affects the interest rates that financial institutions charge on products like mortgages, business loans, and personal loans. A lower rate means cheaper borrowing costs, which can be a significant factor for homeowners, especially those with variable rate mortgages.
Yes, for homeowners with variable rate mortgages, they might see a larger portion of their payments going towards the principal rather than the interest. And those with variable payments could see their total payment amounts decrease. It's a relief for many who are trying to manage their monthly budgets.
It's important to note, though, that for those with fixed-rate mortgages, the impact isn't immediate. These mortgages are usually tied to 5-year government bond yields, which already factor in market predictions. So, while the cut may not have an immediate effect, it does influence future borrowing conditions.
And looking ahead, there might be more rate cuts on the horizon. Burleton from TD Economics predicts the BOC's lending rate could drop to 2.25% by mid-year. It's something we'll need to keep an eye on, especially with the ongoing tariff situation.
Right, Janine. The economic implications of these tariffs are significant. If they persist, they could severely impact Canada's economy and job market. Additionally, any retaliatory tariffs Canada imposes could drive inflation up, making the situation more complex.
It's a challenging time, Steve, but these rate cuts do offer some hope for those looking to buy homes or refinance. Keeping informed and exploring options is key for Canadians navigating these changes. Steve, there's quite a bit of speculation today regarding the Bank of Canada's expected interest rate cut. With the current economic climate and the ongoing tariff war with the United States, many are wondering how this will impact the housing market and the broader economy.
Yes, Janine, the economic landscape is certainly complex right now. The Bank of Canada's decision to potentially lower the interest rate again is largely influenced by the escalating tariff war initiated by former President Trump. These tariffs have put considerable pressure on Canadian exports, and the central bank is likely looking to provide some relief.
That's true, Steve. The tariffs have created a lot of uncertainty for Canadian businesses and consumers alike. By cutting interest rates, the Bank of Canada aims to reduce borrowing costs, which could, in turn, help stimulate economic activity and provide some stability.
From a numbers perspective, the rate cut could encourage more people to enter the housing market, especially first-time homebuyers who might have been hesitant due to higher borrowing costs. Lower rates could make mortgages more affordable, potentially increasing demand for homes.
And for those currently holding variable rate mortgages, they might see a positive impact on their monthly payments. It's a bit of a relief for many families who are trying to manage their budgets in these uncertain times. However, it's important for everyone to stay informed and consider their long-term financial goals.
Absolutely, Janine. It's crucial to approach these opportunities with a strategic mindset. While lower rates can be appealing, potential buyers and homeowners should evaluate their financial situations and consider how these changes might affect them in the long run.
And let's not overlook the broader economic implications. If the tariffs persist, they could lead to increased costs for Canadian goods and services, potentially affecting everything from inflation to employment rates. It's a delicate balance that the Bank of Canada is trying to maintain.
Right. The central bank is walking a fine line. They need to support economic growth while also ensuring that inflation remains under control. It's a challenging task, but one that is necessary to navigate the current economic conditions.
It's definitely a time of change, Steve. For Canadians, staying informed and understanding how these shifts affect their personal finances is key. We'll continue to monitor these developments and provide updates as they happen.
Ontarians might be feeling a sigh of relief as Premier Doug Ford announced the suspension of the province's planned 25% surcharge on electricity exports to the United States. This decision comes after former President Donald Trump threatened to impose steep 50% tariffs on Canadian steel and aluminum.
It's quite a significant development, Steve. The initial surcharge was meant to target states like Michigan, New York, and Minnesota, but the potential for retaliatory tariffs from the U.S. was a major concern. It seems like both sides are trying to find a middle ground.
Absolutely, Janine. Trump mentioned that he would likely scale back the planned tariffs on steel and aluminum following Ontario's decision. This is a classic example of how negotiations can sometimes require strategic retreats to avoid further economic strain.
Right. And Premier Ford highlighted the importance of productive conversations, noting his upcoming meeting with U.S. officials to discuss ongoing trade concerns. It shows that diplomacy is key, especially when it affects around 1.5 million U.S. households that rely on Ontario's power supply.
The stakes are indeed high, Janine. The trade dispute has been impacting equity markets, with U.S. indices showing signs of distress. According to Robert Kavchich, a senior economist at BMO, these tariffs and the tone of the U.S. administration are causing significant market volatility.
And while Canadian markets have been somewhat resilient, thanks to prior adjustments, the ongoing uncertainty is a concern for sectors like steel, aluminum, and automotive manufacturing. It's a reminder of how interconnected our economies truly are.
Exactly, Janine. As Kavchich pointed out, while tariffs are inherently negative for growth and inflation, the broader economic implications can't be ignored. The potential for increased costs and job impacts in Canada is something that both governments need to carefully navigate.
It's a delicate balance, Steve. For Canadians, staying informed and understanding these shifts is crucial, especially as they affect personal finances and broader economic stability. We'll continue to monitor these developments closely.
Thanks for tuning in to another episode of the Ontario Mortgage and Real Estate Insights podcast. We hope you found today's insights valuable as you navigate the world of mortgages and real estate.
Before you go, a quick reminder, Real Approved is here to make your mortgage journey smoother. Whether you're buying your first home or refinancing, their experienced team is ready to guide you with personalized support every step of the way. Visit realapproved.ca to get started and take the next step toward achieving your homeownership goals. Catch you next time and stay informed with the latest industry insights.